Hey everyone, hope everyone's doing well and had a good trading day. This is the Emini end of day review for Monday, July 22nd, 2024. So we'll start off with the weekly chart. And as we know, we have a nested consecutive buy climax pattern. And so we have three big pushes up, 1, 2, 3. And then in the third push, we have 1, pullback, 2, pause, 3. So this area is expected to be resistance. And then we had the outside down week last week, which is a little bit of a surprise, but the context made sense for it. Now, one of the problems with the sell here, 2 weeks ago, the week of July the 12th, that's a bad sell signal bar. So you have bulls arguing, tight bull channel, consecutive bull bars. This is a weak sell signal bar. Bulls will buy below this bar and scale in lower. Now we have the outside down bar. So what happens when we retest the low of this bar? Well, the low of that bar becomes resistance. Bulls who bought here, scaled in lower, they're disappointed with their entry bar. They're likely to exit their longs on a retest. You also have bears who did not sell. They're also looking to sell a pullback. So this outside down bar, enough of a surprise and strong enough for at least a second leg down. So I think what the market's doing here on Monday is retesting an area where traders got trapped, and this is likely to become resistance before lower prices. With that said, when we look at the daily chart, here's the third push, and we see the three pushes here, 1, 2, 3, tight trading range, and then bear breakout, which got below the moving average. And we can see we have a micro channel for the bears, at least 4 bars plus the gaps. And then we have this bull bar today triggering the first buy. But after a micro channel, the first pullback is likely to lead to sellers above and a second leg down. Plus, Friday was a weak buy signal bar. So there's probably sellers above this bar for a couple of reasons. And then you see the bull reversal bar today on the daily chart. But when you look at the 5-minute chart, you know it's a trading range day. It was an expanding triangle. So coming into the day, let me just draw the high of Friday. We had a gap up on the open, and it's a fairly big gap, likely to lead to higher prices. You can view the gap as a breakout. It functions the same way. So if you have a big gap up on the open, it's likely you'll get the price moving in the same direction as the gap. It acts as a breakout. So you have trap traders below. They'll use any pullback to exit, or bulls who didn't buy will look to buy lower. But on the open, we had a weak bull bar. It's a bull bar because it closed above its midpoint, but it has a bear body. So that's a weak bar to buy above, probably sellers above bar 1. The tail below plus the gap up makes it more likely that there are buyers below bar 1. And then bar 2 was a little bit of a surprise. It's a bull trend bar, but there's a big tail on top, and that's a bad sign for the bulls. Whenever you have sellers into the close of a trend bar, like bar 2, you always have to be suspicious of the breakout. And Al talks about that a lot. He would talk about it in the trading room. He talks about it in the course, in the books. If this is a strong bull breakout, why are traders selling into the close of the bar? It doesn't make sense. So that's a problem for the bulls. But bar 2, it's a bad sell signal bar, and enough of a surprise above bar 1, which was a bad buy signal bar, that there are probably buyers below, and we'll probably get a second leg up. Looks like we're vacuuming up to resistance, maybe Friday's high. So we'll probably go at least a little bit higher. One other problem with the bulls on the open today, 50% of breakouts on the open are in the wrong direction, and 80% of opens are trading range opens. So most days are not trend from the open trend days. Plus the context, not very good for the bulls. And remember, coming into the day, Friday was a bad buy signal bar. There's probably sellers above the high of Friday. And then just one more thing. I said 80% of days they have trading range opens, and most, like 20%, are trend from the open. And so what that means is it's likely we're going to trade below bar 1 as well. And then 3 was a pause bar. So it looks like we have a gap up, maybe a buy climax, a pause, another buy climax, a pause. We might get one more and test the high of Friday. And by the way, if I say yesterday, I'm referring to the prior trading day, which in this case on a Monday is Friday. Bar 3 is an inside bar, probably sellers above, buyers below. Inside bars have a lower probability of breaking out. They're trading range bars on a lower time frame. Plus buy climax, pause, buy climax, pause. We'll probably get to this resistance level, but probably not too far above it. And then bar 4, we had another bull trend bar. So that's 3 consecutive buy climaxes. Bar 4 is smaller than bar 2, but it's a better bar. There's less selling into the close. That's a warning that this is climactic. Why is a better looking bar happening later? It doesn't make sense. The price is racing up to resistance. This is not what strong bull breakouts look like. It's kind of choppy. A breakout, a pause, a breakout, a pause, another breakout. That's characteristic of wedge behavior. And the best case for the bulls is that it's a parabolic wedge. And even in the case of parabolic wedges, you get deeper pullbacks before trend resumption. If this is a parabolic wedge, which you can argue it is, it's a bull breakout all the way from the close of Friday to bar 4, then you can argue this is all one big bull breakout on a higher time frame chart. And that's true. But the pullback could be very deep. Like I said, we could fall all the way below bar 1. Give me just 2 seconds here. I apologize about this video being a little off. I'm not in my home office, and things are just a little different when I'm not in my normal routine. But moving on, bar 5, we had another bar just like bar 1. It's a bull bar, but it's a high one with a weak signal bar after 3 consecutive buy climaxes. The odds are there are sellers above bar 5. There might be buyers below, but again, they may not come in until below bar 1. We can get a very deep pullback here. And then 6, we sold off. Traders sold to close of bar 5, disappointed. Bulls don't want to buy a high 1 in this context, and most opens are trading range opens. So we had a couple of legs up, and we'll probably get a couple of legs down. 6 is a strong bar, it's a strong bear trend bar, but the context is bad. You look to the left, it's big up, big down. The market's in a trading range, and we're not really breaking out of anything yet. Even if we fell below bar 1, we'd still be within the gap up and the entire range of Friday. So we might go a little bit lower. This is strong enough for a second leg down, but the downside might be limited. It looks like a trading range open. 7, we went a little bit lower. Bear breakout and follow through, but bar 7 is the first bar, closing at a new low. So that's the breakout bar to a new low, and we still need a follow through bar for the bears. But again, strong enough, 4-bar micro channel. A couple of good bear bars, there's probably sellers above. And then 8 went even a little bit lower. Bear breakout and follow through, 7 and 8. You can even say 6, 7, and 8. Now we've had a couple of closes below bar 1. That's good for the bears. The problem is we still have the big gap up. So big up, big down. This might be around a 50% pullback of the gap up. Plus you have the moving average rising, which is support. So let me just add the 50% pullback level. And we can see that's where we're testing on bar 8. So dangerous to sell down here. Plus most breakouts pull back. So even if you're betting on a second leg down after this sell-off, this looks like it might be support. Bears who sold up here take profits. They look to sell higher for the second leg. Again, big up, big down. So in trading ranges, bulls look to buy sell-offs like this, especially at support, 50% pullback, and the moving average. Also, we might have a little bit of an expanding triangle on the open. We sold off on 1, rallied up to 4, sold off on 8. If we start reversing again and get to a new high, that will be an expanding triangle. And then 9's a bull trend bar, closing on its high. What about selling above 9 or selling above these bars? Some traders will. You can argue 8's a bad buy signal bar, and sellers above 7 as well for a second leg to the downside. But 9's a bull bar closing on its high in a trading range open after a gap up. And it's more common to see reversals of micro channels, especially on the open or in trading ranges in general. So bears might exit above 9 and just look to sell higher. Bulls might take a chance and buy, but this might need a second reversal before we rally. So bad follow through on 10. Bulls disappointed if they bought the close of 9, but they know we'll probably go a little bit higher. This looks like a trading range, not a bear breakout into a bear trend. 10's a low 1 short, but it's a trading range bar. The context is bad. If you're selling this low 1, you're selling below a trading range bar at support. So probably buyers below bar 10. 11 remained an inside bar. So we have a bull breakout, a pause. The bulls are looking for continuation, but it's an inside bar and it's a small bar. And that will reduce the probability for the breakout. Probably buyers below 11 and sellers above, but the sellers may not come in until a little bit higher. 12, rallying to the upside. 12's the close of the first 60-minute bar. It's the first hour. The day opened here, and the first close of the 60-minute chart is here. So we have a very small bull body with big tails. It's a trading range bar. So probably sellers at a new high, buyers at a new low, which is consistent with what I'm saying about an expanding triangle open. Now we have a micro channel since bar 8 up to 12. All of the bull bars in here closing on their highs. That's good buying pressure. We're probably going a little bit higher. 13, another bull bar closing on its high. There's a lot of overlap with 13. That's not ideal. Now you can argue leg 1, pause, leg 2, there might be resistance here, but it still is very tight. It's all one simple leg. There's no pullbacks since bar 8 to 13. So probably buyers below for a second leg up. Bears would rather wait for higher prices to sell than sell here. You might also have traders selling here because of the breakout test. Bar 5 was a bad sell signal bar. Then we got bar 6, 7, and 8. So traders got trapped buying below here. They may use the retest to exit their longs. And then instead on 14, we continued to rally, which is a little bit of a surprise. Look at the buying pressure in here. All of the bull bars closing on their highs, and that's really good for the bulls. But when you consider where the market is now on bar 14, not an ideal place to buy. What happened the last time we tested Friday's high? We got a close just above it, and then sold off for many points. And just ask yourself when you look at bar 1 to bar 14, is this a bull trend? Is it a bear trend? Or is it neither? And of course, it's neither. It's a trading range open. So if the market's high, you want to look to sell. Even if this looks like a strong bull breakout, there's no breakout until there's a breakout, and we're not at a new high yet. $15, another bull trend bar, but smaller body, and still not at a new high. So my concern is that there's sellers at a new high, despite how strong this looks. The bulls should get a second leg, but because it looks like an expanding triangle in trading range open, what's really common is you get a strong bear breakout, but the sellers don't come in until above the breakout. Strong bull breakout, but the buyers don't come in until below the breakout. And the logic for that, no one wants to sell low in a trading range. They'd rather sell a deep pullback. No one wants to buy high in a trading range. They want to buy a deep pullback. There's a little bit of a bullish bias today because of the gap up, and all of the bars so far today are completely above the moving average. But what the bears are hoping for at this point by bar 15, they're hoping for a bar 18 reversal, double top with bar 4. We get an early high of the day. We get a breakout below here, the neckline, fall for a measured move, and get some sort of bear trend. So here's the double top, breakout below here, test by Friday's close. The bulls, of course, want the opposite. They're hoping for bull breakout, two-legged pullback, and then we continue to rally. But let's see what happens at a new high. So the high of bar 4, 56.07 and 3/4. And then we have the same price on the high of bar 16. 16 tested the prior high of the day to the tick, and then reversed down. We have an outside down bar. 16, not the highest probability sell. The location is good, but the momentum for the bulls lowers the probability. This will probably get a second leg. We just don't know if there's buyers below here or if they'll come in down here. But this is so strong, there's probably buyers below 15 looking for at least a small second leg. Plus, 16 is an outside bar. That's a trading range bar, expanding triangle on a lower time frame between these two bars. So probably buyers below, sellers above. 17, we're getting a bear breakout. Consecutive bear bars, good for the bears, but compare the strength of the rally to the sell-off. The bears still have to do more. However, this is pretty good for the bears because consider the flip side. The bulls have this breakout, context is bad. Now 17 is a high one buy signal bar, but it's consecutive bear bars. It's probably sellers above 17. The upside is probably limited. That's twice now that we've had one close above Friday's high before a failed breakout. 18, we tested the high of Friday once again and then sold off. We triggered the high one buy, but there were sellers above. It's a weak buy setup. Now the probability might be shifting for the bears or in favor for the bears, because it might be an expanding triangle, down, up, down, up, and then maybe back down. But this still might be strong enough for a second leg. 18 is a bad sell signal bar, so there's probably more buyers below, but not very good to buy above. The signal bar closed below its midpoint, and the context is bad. So again, the upside here, probably limited. 19, a good looking bull bar, but still not breaking out. We need to see what happens when the market breaks out to a new high, and we need follow through, and 19 is neither of those at this point. So it's a good bar, but it might be simply leg one, then maybe a minimum second leg before a reversal. If you're a bull and you bought the close of 15, betting the momentum is good, we're going to continue higher and higher, and then you get these two bars, you're probably disappointed with buying the close of 15. You might scale in lower, and then when you're back at your original entry price, you may look to exit. And it looks like that's what happened on bar 20. Disappointed bulls and bears who know we're high in a trading range, possible expanding triangle. We actually broke out to a new high on bar 20, 56.08 and a quarter. So a two-tick breakout. But the market's rejecting this price. It's pretty clear. It's almost a ledge, and you need four prices at the exact same tick. So it's not really right here. We only have three tests, and they're not all exactly the same price. But the point is, this price is obviously important. The market keeps testing it, but it keeps failing at it. But however, we know it's important. So when you break out below it, we'll likely reverse and get back above it. 20 is a strong bear trend bar. Is it leg one? Is it leg two? For me, I would call bar 20 leg one. And I see these two bars as a pullback within the rally. So here's a rally with a pullback and a second leg. Now we have a double top. We have a nested double top over here, bar 4, and then these two can be considered. On a higher time frame, it's just one test and then a reversal, but obviously we have a double top here as well. 20 is reversing down, so again the bear's hoping for a bar 18 reversal, double top, break below the neckline, fall for a measured move. The bulls are hoping. It looks like we're going lower, but they can prevent the bear breakout from succeeding below the neckline of the double top. We get a double bottom for the bulls, maybe even, you could consider it a wedge with a low of 1, and then somewhere down here, 1, 2, 3, and then a reversal back up. That's what the bulls are looking for. So 20, probably leg 1, strong enough for a second leg, and we're probably going at least a little bit lower. 21, bad follow through. And that makes sense because bar 20 was following a weak signal bar. The odds were buyers below a bar like 18, 19. For the smaller double top, the bears were hoping for a breakout below the neckline, the bar 17 low. And they got the breakout. Now we're pulling back, testing the neckline, testing the price where bulls got trapped buying. Bears hoping we have a breakout, pullback, and then a second leg to at least here. 21, what about buying 21? If you buy 21, you're buying a weaker bull bar after a stronger bear bar, high in a trading range, so not ideal. There might be sellers above, and 20 strong enough for a second leg. 22, we have another bear bar, falling below 21, which was a weak sell signal bar. Not ideal to sell here. We might pull back again. But it looks like we're going lower, and the bulls would rather buy lower than at the top of the range. So we might test back down here, maybe the bar 8 high, weak signal bar, maybe double bottom with bar 8, maybe the wedge bear channel line. 23 were falling lower because bulls don't want to buy in the middle of the range with bear momentum. They want to buy lower. Remember I said with a strong leg like this, bulls don't want to buy up here at the top of the range, but they'll buy deep pullbacks. and that can include all the way to a new low. Just like here, strong enough bear breakout for a second leg down, but the bears weren't willing to sell until all the way up here, and only now are they getting their second leg. So 23 consecutive bear trend bars and micro channel since bar 20, probably going lower, sellers above 23. 24, another small bear reversal bar. You can call it a low 1. It's sort of a low 1 variation on a smaller time frame, but lots of overlap with bar 24 and the prior bar. So not ideal. Plus we have 24 is the close of the second 60-minute chart bar. Here's the open, here's the open bar 13. So we opened here, closed here. What we have is a bear reversal bar. We rallied, and then 24 closed on its low. It's always good to think about the higher time frames and sort of visualize what those charts look like without actually looking at them. But however, let's think about the context. Bar 1 on the 60-minute, we have a trading range bar, tiny bull body, big tails above and below. We went above the first bar. Now we have a bear reversal bar, but we know we're at the bottom of a trading range after a gap up. So the downside here might be limited. Again, the bear's hoping for a double top, breakout below the neckline, fall for a measured move. They're going to have to prove themselves as we get to here, because this is more likely support. 25 falling a little bit lower. Let's just draw the neckline and see how the market reacts to it. So 25 broke out below it, but pulled back immediately. So it could not close below. That's a bad sign for the bears. Some computers will see this as 2 or 3 legs down. 1, pause, 2. 1, 2, 3. Double bottom. Probably support in this area. But 25 is a weak buy signal bar. Micro channel since 20. But we know how the micro channel panned out before. The market can reverse without warning above a bad signal bar, especially in trading ranges. That's common. So probably sellers above for a small second leg, but this could already be a second leg. 1, deep pullback, 2. Inside bull bar 26, probably buyers below, sellers above. It's a low 1, but at the bottom of a trading range. Small bar, so small risk. If you buy above it, your stop will probably get run. And then 27, we had another bear breakout attempt, but another failure. So it's a second attempt to a new low of the day, which failed. Now we're getting a tight trading range, a lot of overlap, breakout mode, double bottom. Bulls, they'll redraw the wedge some way like this. 1, 2, 3. There's a bear channel line here that's acting as support, and the bulls are looking for a reversal, arguing expanding triangle. Very slight higher high here, but it is an expanding triangle. Down, up, new low, and then the bulls looking for a new high. And this looks like a trading range, and we're low in the range, so I think it's more likely we try to rally for a new high. Inside bear bar 28, but variation of a low 1 or a low 2, bottom of a trading range. The bears need to do more. They need to break out far below the range and get follow through. And then 29, a strong bull reversal bar. And that might be enough for bears to exit above. It's aggressive for bulls to buy. It's a low probability swing trade. Not yet high probability, but some bulls will buy above the bar. It's a strong bar, bottom of a trading range. For all the reasons I've been saying, the channel line, possibly a wedge bottom, expanding triangle, low. And then 30 is an inside bar. And you can see what happened on bar 30. Bar 28 is a weak signal bar for the bulls. If we trade above it, there's probably sellers above. It's an inside bar, bear bar, and then we got 29. That's a pretty decent bull bar. But look what happened on 30. Here's the high of 28. And you can see 30 pulled back to it. Bears who sold above 28 disappointed with 29, exiting their shorts on 30. So now we have a bounce here, and we may look to go a little bit higher. And then we went outside down 31, triggering a low 2, low 1 below 26, low 2 below 30. But the problem again with outside bars, similar to 16 up here, it's an expanding triangle on a smaller time frame, and even on the higher time frame, on the 5-minute chart. Every new low, there's buyers. And you can see we had 2 failed breakout attempts below the bar 8 low on 25 and 27. This looks like a tight trading range with probably buyers below bar 31. Maybe they come in below 29. And then instead they came in right below 31, and we went outside up 32. Now 32, context always matters for outside bars. Would you rather sell below bar 31 at the bottom of a trading range or buy above 32 at the bottom of a trading range? Plus, consecutive outside bars, OO pattern, that's breakout mode. And at this point, it's more likely we're going to the upside. The bulls still want follow through. They want another bull bar on 33, which would confirm the bull breakout above 32. They also need to get above the moving average. And then a pause bar, 33. However, think about the signal bar for 33. Bears arguing low 2 or low 3, maybe low 1 below 30, low 2 below 33, or 1, 2, 3. Bulls hoping it's a wedge. Bears hoping it's a wedge. Bear flag. However, the context is bad. The bears are not getting the breakout, and so this is still a bad area to sell. Plus, the signal bar is weak. There's probably buyers below 33. And then we didn't even trigger the sell, and instead we rallied on 34, so going a little bit higher. 33 was minimum follow through for the bulls, so OO pattern, 32, bull breakout. Minimum follow through, 33, the absence of a bear body, and then another bull bar, 34. Bears will still argue it's 3 pushes up, and there's probably resistance in this area. So another small bear bar, 35, inside bar, but the equation still isn't good. It's a really small signal bar. Small risk means low probability. If you sell below this bar, stop above, you're probably going to have your stop run. And even if you're selling here, what are you looking for? If you're looking for a bear breakout, it's low probability. The bears keep failing at new lows. Tight trading range. OO pattern, bottom of the range, expanding triangle. We might be reversing back up here. So your best case might be a retest of the lows. 36, we have another bear bar, but it's fairly weak and could not break out below 34. So we're going mostly sideways here, but we're also getting higher lows and higher highs. We have a high 1 on bar 37. Bull bar closing on its high. Probably go a little bit higher. Bears might come in above 35. Still arguing, 3 pushes up, wedge, bear flag, 4-second leg down. The bulls are hoping this becomes an endless pullback. Here's a bear leg, we're pulling back, and then we don't stop pulling back. And then there were buyers above 37. 38's rallying, we're rallying above 35, the high of 35, 86 3/4. And then the close of 38, 87 1/4. So we closed above the high of 35. Good for the bulls. They want follow through now. And they got it on 39. That's a problem for the bears. We have a micro gap from the high of 37 to the low of 39. 3-bar micro channel, probably buyers below. Bears still arguing, 1, 2, 3. But you have to judge the selling pressure when you're looking at wedges. And we have open gaps here. We have negative gaps. The body of 30, the body of 36 do not overlap. And it looks like we might be getting another gap here. So this might become, it is a wedge, 3 pushes up, but the selling pressure is weak, and the bulls are looking for an upside breakout. Outside up 40. Not what the bears are hoping for, the gaps remaining open. Bears who sold above 35 have brief chances to avoid a loss, but we're continuing higher. 4 consecutive bull bars. And becoming a tight bull channel. And then we had the upside breakout, 41. I think at a minimum, the bulls are looking for a measured move of the wedge, which is here. Strong enough breakout, and you can even argue it's a leg count reset. It's a surprise. You have a bull breakout of a bull wedge, or maybe a bear wedge, 3 pushes up, and then a bull breakout. So this might reset the leg count. So 41, strong bull bar. The bulls still want follow through, but the reality is we're probably going at least a little bit higher. And then 42 was follow through, and it reached the measured move target to the tick. But ask yourself, is that enough reason to sell? Well, probably not. There's 5 consecutive bull bars. We're getting high in the range. Bears are probably waiting for at least Friday's high, if not a new high, to sell. So a pretty tight bull channel. Not ideal to sell, especially below a bad sell signal bar, 42. So we're continuing higher on 43. Shaved bull bar, fairly small, but still probably going higher and buyers below. 44. It's a doji testing yesterday's high, Friday's high. But look at the rally. There's hardly selling pressure since here. Open gaps here, here, and then a micro channel from bar 40 with very little selling pressure. So we're probably going at least a little bit higher. But if you take into consideration the day structure, this probably will not become a strong bull trend day. Just look at the day. It's probably an expanding triangle. 1, 2, 3, 4, 5. We're heading for a 6th leg up, and there's probably sellers at a new high of the day. 45 triggered below 44. That ended that micro channel, but the odds were buyers below, tight bull channel, micro channel. Then we went outside up 45. High 1 at the top of a trading range. The upside's limited, but we'll probably get to a new high. 46, another bull reversal bar. Bears really don't have anything to sell. Bulls can hold, but it's becoming risky because we're getting to the top of the range. Finally, a bear bar, but it's technically a bull bar, closing above its midpoint. 47, you can call it a high 1 at the top of a trading range, and no longer a micro channel. Probably sellers above 47. If not bears, at least bulls looking to take profits. 48, we went above 47 and then reversed down. But 48 is a weak sell signal bar and a weak sell setup in general. It's a double top, but this is a lot of bars to the upside in a tight channel. The bears have to do more. So probably buyers below 48. And then 49, the buyers came in on the close. We got a bull breakout 49, but first bar closing above all the bars. To the left, the bulls want follow through. This might be a little bit of a climactic bar. And then you can see we pulled back immediately on 50. The bulls did not get follow through. It was a little bit of a climax, and bulls took that chance to take profits. 50 pulled back immediately, testing Friday's high, which the bulls are hoping becomes support. It was resistance earlier in the day. We got a bull breakout above it. We're testing it again. Clearly, it's an important price. Inside bar 51, that's consecutive inside bars, I believe. Yep, the lows of 49.50 are the same. So 51 consecutive inside bars. It's breakout mode, but it's also a tight trading range at the top of an overall trading range day. We'll probably start to go sideways here. Buyers below, sellers above. And then we had an outside bar 52. So you can see how the market's reacting at the expanding triangle high, the prior high, the bar 20 high. There's probably a limited upside here. It probably will not become a strong bull trend. But this was enough damage. This was the strongest rally of the day, and will probably not have much to the downside either. So again, we'll probably start going sideways here. Buyers below 52, sellers above, but they may not come in until a new high of the day. Inside bar 53. Reduces the probability for breakouts, probably buyers below and sellers above. Outside bar 54. And you can see the market's clearly in a tight trading range. Usually it's best for traders to just kind of watch this unfold rather than trade it. whenever it's a tight trading range, just wait for a breakout. And then another overlapping doji. This looks like barbed wire. It's really a tight trading range. Not really worth initiating trades here. You can argue, and it may not be the greatest argument, but you can say tight bull channel, trend line break, and we're testing the trend's high. But it's really a weak argument for a major trend reversal. The selling pressure is weak. Buyers below, sellers above. Outside bar, 56, but the upside's probably limited. It's a very tight trading range. Most breakouts fail. Outside bar, expanding triangle, probably sellers above. And then inside bar, 57. Bad high 2. You can call it a high 1 or a high 2, top of a trading range. Sellers above, but bad sell signal bar. Bad sell setup in general. And it might be, we've been above the moving average for almost 20 bars. Probably buyers at the moving average. Inside bar, 58. So that's consecutive inside bars, breakout mode. But really it's just a tight trading range. There's probably sellers above. Despite the strong bull bar, the context is bad. 59 breaking out to a new high. The bulls still need follow through. Not a very impressive bar. Bears will sell above 57 and a new high and scale in higher. And then 60 reverse back down, right into the middle of the range. 60 is a good looking bear bar, but the context is bad. It's the middle of the tight trading range. It might be buyers on the close, or we'll go a little bit lower but find support below. And then 61 reversed right back up. But now 60 is a bad buy signal bar. So 61's rallying above it. And that's a weak buy setup. Probably sellers above, sellers on the close of 61 and above 61. 62, we have a doji follow through bar for the bulls. But now you can say 3 pushes up. It's nested, maybe 1, 2, 3. 1, 2, 3. A couple of different ways to look at it. Tight trading range, expecting a trading range in this area. So probably limited upside. We'll probably fall back down. $63 inside bar, disappointing for the bulls. Probably sellers above. Buyers below, but they may not come in until a deeper pullback. Inside bar 64, consecutive inside bars. Bulls might just exit below it. Bears might take a chance selling below it. But it's still a tight trading range, not really worth trading, especially with stop orders. And then outside up 65, but a bad high 1, probably sellers above. 66, another bear trend bar, similar to 60. But again, might be 3 pushes up. The bulls are clearly failing up here. We might come back and test the bottom of the range. That's exactly what happened on 67. Market sold off, moved a fair distance. This breakout was strong enough for a second leg. Immediately got a deep pullback, but 67 a bad buy setup, probably sellers above. Inside bar, 68, sellers above, buyers below. 69 rallied above, triggered the buy, but it was bad. Probably start to go for a second leg down. 70, bear bar, starting to go down for a second leg, but the downside's probably limited, tight trading range. Bear breakout, but not very strong, and also not really breaking out of the trading range. And then triggered the sell, but reversed right up on 71. Now we have a double bottom, decent bull signal bar. We might test the high of the range once again. 72 outside down, but now we have 3 pushes, and it's low in the range, probably buyers below. 73, lots of overlap, very tight trading range. It's just buyers below, sellers above, all the way. Bull trend bar, 74, but probably a vacuum test of resistance, testing the top of a tight trading range. Probably sellers above. 75, inside bear bar, weak high 1, sellers above. This might be strong enough for a second leg up. And then 76, the tail on 76 might have been that second leg. Plus you could even see it as 3 pushes. Rallied on 73, pulled back, rallied on 74, pause, and then rallied on 76, reversing down. probably test lower in the range. We're in the middle of the range, so 50-50, best to wait. And then you can see we're going very sideways with a big trading range bar on 77, sellers above, buyers below. Falling a little further, 78, but you can see buyers below these bars. The downside's limited, probably buyers below here, sellers above. Inside bar, 79. Very tight trading range again, best to wait and just not trade when it's doing this. Bad sell signal bar, bad context for stop orders, so buyers below, sellers above. Inside bar on bar 80, just one bar to go, not worth doing anything in this context. And then just up and down into the close. For always in today, coming into the day, I thought because of the gap up, it might be always in long, but once you get consecutive buy climaxes, probably always in short up here. So the context makes it always in short, but then once you get a clear bear breakout, and after a gap up below bar 1, up and down, might be always in long down here because of context, and that's what happens pretty much all day inside of a trading range. So rather than thinking in terms of always in, I like to think buy low, sell high, and scalp. So we're high, we got yesterday's high, Friday's high. Buy climaxes, probably always in short. Bear breakout, but testing the 50% pullback of the gap, plus the rally to 4, and the moving average, probably always in long. Another rally, but expanding triangle, testing the high where there's resistance, probably always in short. Another sell-off, but 2 big legs down, expanding triangle, might become always in long again. And then through here, at a certain point, yeah, it's always in long, but it becomes so tight, it's best to just get out of trades and wait for more clarity. For stop order trades today, you could sell below 6, taking a chance, maybe even 7, but then it's starting to stall at the 50% level, and if you see 9 start to rally, you might just get out or get out above 9. You can buy above bull bars, closing on their highs. This is fairly low in the range, close to the middle, but we're probably going higher. But then up here, I would not sell below 16. This is too strong. And then there was no signal bar. So if you went to a lower time frame, like a 2-minute chart, there's probably a decent sell signal bar during bar 20. But in this case, you might have just sold below 19, taking a chance. Other traders, they wait for the breakout and sell the breakout pullback, but that's a limit order trade. Low on short below 22, expecting lower prices, okay sell. But the downside's probably limited. And then I thought you could buy above 29, but it didn't trigger. Really not great stop orders through here. But you start getting consecutive bull bars, you can buy above these bars. The bull breakout, 41, you could buy above it. And then you might take the gift on 49, and then through here. Really would not recommend stop orders through here. You can argue 3 pushes up, 64, but you're taking a real chance. And if you used a tight stop above the bar, you got stopped out. Whenever you have a tight bar, a small bar like 64, it's better not to use a tight stop. Maybe use a measured move of the signal bar, 1 or 2 times the bar, or the bar before it, or even like a measured move of bar 61. For limit orders today, I thought you could sell above 1, and then sell above 3. Probably buy below 1, but not blindly. There's a lot of momentum. And then there's small tails on these bars, traders buying small pullbacks of bars. And then up here, new high of the day, there are sellers waiting. I thought selling above 17 was reasonable. High 1 at the top of a trading range, sellers above. And then micro channel, you could sell above the first. Reversal, but that was above 28, which came at the bottom of the range, so the context isn't good. 30 is a low 1 at the bottom of the trading range, maybe a low 2. You could buy below it. Weak sell set up 35, you could buy below. Same with 39, same with 44. And as I mentioned, all through here, I'm not going to repeat myself because it's really just buyers below bars, sellers above bars. This is a limit order market. tight trading range. And then where do we go tomorrow? Well, strong enough bear breakout for a second leg. The market could rally because this was a tight trading range. Maybe we test a little higher, like to the low of the July 11th bar, so a little bit higher before we find sellers. So I think there are sellers above today's high, and it's a low one short. In an overall trading range, there might be buyers below the bar. It's a weak sell signal bar, but I'm expecting really more sideways. And as always, if you have any questions for me, please leave them in the comments and include timestamps. And I will get back to you as soon as I can. All right. Thank you, everybody, for watching, and I'll talk to you next time.